Hi friends, very good evening all of you. I hope all of you are doing good. So are we ready? Shall we discuss audit report? In our previous class, we have discussed standard on auditing 700 form and content of auditors report, independent auditors report. So in today's lecture, we are going to discuss two standards. First one, we are discussing SA 705 revised. So put the heading SA 705 revised. So what is the title of this SA 705 revised? It is modifications to the opinion. What is this? Modifications to the opinion in the independent auditors report. In the independent auditors report. So what is this? This is the title of the standard is modifications to the opinion in the independent auditors report. So highlight this word modifications. Now the question is, what is meant by modification? How many types of modifications are there? When to opt which type of modification? And finally, how to modify that? What is the wordings? How to modify? This refers to the wordings. What type of wordings are to be used in the auditor's report? So the scope of SA 705 can broadly be divided into these four parts. So what is the meaning of modification? How many types of modifications are there? When to opt which type of modification? Say for example, there are three types of modifications. So which type of modification is to be used in a given situation? That is very important. So that is where your understanding of the standard comes into the picture. So in a given situation, what type of modification is to be given? This is also tested in the examination. In the examination, what happens, they will give you one scenario, case study. So in this situation, what will you do? In CA final level, what they do is they will also ask you to frame one audit report paragraph. Okay, then you need to have practical exposure also, like how you perform that in a real life situation. You need to understand, you need to do the wordings also. But as far as CA intermediate and CA IPCC is concerned, whether you are in old syllabus or new syllabus, it will be theoretical. Framing the audit report paragraph is not yet tested. So you need to know which type of modification is to be done in which type of situation. That is third part. And the fourth part is how to modify the wordings. Okay, so shall we go and look at this standard step by step? Okay, now look here. Basically, audit report is of two types. Basically, audit reports are of two types. First one is a clean report or unmodified report. Clean report or unmodified report. Second one is a modified report. First one is a clean or unmodified report, and next one is modified report. What is modified report? There are three types of modified reports. So basically, what is modified report? A report other than a clean report. What is modified report? Modified report is a report other than a clean report. It is other than a clean report. Okay, how many types of modified reports are there? There are total three types of modified reports. There are three types of modified reports. Okay, what are they? One is called a qualified report. Second one is called adverse report, also known as negative report. adverse report or negative report. And third one is called a disclaimer of opinion. A disclaimer of opinion. Okay, so total how many types of audit reports are there? All the types of audit reports are classified into two, modified, unmodified. Having said that, total types of audit reports are four. One is a clean report. Second one is a qualified report. One is a clean report. Second one is a qualified report. Third one is adverse report. And fourth one is disclaimer of opinion. So there are total four types of audit reports. Okay. So first copy this. First copy this in your notes. Okay, now look here. Let me give you, let me set the backdrop to you so that you can easily understand what it is. This is, say for example, auditor. Who's this guy? This guy is auditor. And this guy is, say, shareholder. There is one auditor, there is one shareholder. Okay, so this shareholder asked the auditor. Shareholder asked the auditor whether financial statements are showing true and fair view. Whether financial statements are showing true and fair view. Auditor can give probably four types of answers. Auditor can probably give four types of answers. What are they? One is yes. The financial statements are showing true and fair view. After this, he has put a full stop. After this, he has put a full stop. So what did he say? He said, yes, the financial statements are showing true and fair view. So this is one category. Okay. Third category is no. The financial statements are not showing true and fair view. And he has put a full stop here. So what is the first one? First one is yes, the financial statements are showing a true and fair view. This is completely positive. This is called clean report. This is completely negative. This is either called a negative report or called adverse report. There is something which lies in between these two. What is one? Yes, financial statements are showing true and fair view. What is third one? No, financial statements are not showing true and fair view. And then comes in between these two, now the auditor says yes. Financial statements are showing true and fair view. Financial statements, the financial statements are showing true and fair view, but I am not putting full stop here. What I am doing, subject to the following. Subject to point number 1, point number 2, point number 3, point number 4, point number 5. These point 1, 2, 3, 4, 5 are there, no? These are called qualifications in auditor's report. Qualification is not a positive thing, okay? Here qualification is not a positive thing. It is not I am a chartered accountant, that is my qualification. No. In audit report, qualification is a remark. In audit report, qualification is a remark, a negative comment. So here what auditor is saying, overall I can say financial statements are showing true and fair view. But I am not saying financial statements are showing true and fair view, period. No. Financial statements are showing true and fair view subject to certain points which I want to communicate. That means I am saying that financial statements are showing true and fair view, which is not, an absolute statement with, full affirmation or full confidence. I am saying financial statements are showing true and fair view subject to certain reservations, subject to certain qualifications, subject to certain remarks, comments. Then comes a situation where the auditor is saying IDK. What is IDK? I don't know. What is IDK? I don't know. Here what he says, we are unable to express an opinion whether financial statements are showing true and fair view or no. This is too dangerous. So in fourth situation, what auditor is saying, I don't know whether financial statements are showing true and fair view or no. When it happens, when there are no books of account, when there is no audit evidence given, like some extreme cases like books of account were seized by some revenue authorities or police or enforcement directorate or CBI, or on some inquiry like revenue departments like income tax people, they have taken away the books of account and the copy is also not available with the client. If it is computerized, then one copy will be available to you, or at least you have taken the backup, copy is available to you. Physical books, one photocopy is taken, then it is available to you. In a situation where audit evidence is not available, books of account is not available, the auditor will ask you one question: how can I express any opinion? When the audit evidence is not given, how can I express any opinion? So this is something like, I'll give you a very simple example to understand. Imagine your brother is studying in a school. Your father called you and asked, go to the school, speak with the class teacher of your brother, or speak with the principal or headmaster of the school, and inquire and ask the opinion of the class teacher, opinion of the principal about your brother. So you went to the school. So you asked the principal, sir, good morning. I am so and so person's brother. He is studying in 9th standard in your school. My father has sent to you. I need 2 minutes of your time. Then the principal said, okay, ask what you want. Then you asked, sir, what is your opinion about my brother? Now this principal, probably he can give you four types of answers. Answer number one. The principal has nothing to speak negative about your brother and everything is positive, like a clean white paper, no dot on the paper. He said, your brother is a gem. He is such a nice student. He always stands top in the class, always in rank 1, 2, 3, obedient, disciplined, and his attitude towards his other friends, his attitude towards the lecturers and the other employees of the school, it is very nice. He is overall a very nice student. We are very happy with him. We are thinking of giving, the best student award to this guy for this year. So this is the opinion given by principal. If you observe, all positive, nothing negative. This is situation 1. Situation 3. The principal, can also tell you extremely negative opinion. Your brother is such an idiot. He is a dash. We are thinking of throwing him out of the school. He is, definitely a headache to everyone. Neither he studies properly, nor he comes on the time. Punctuality is not there. Discipline is not there. Extracurricular is not there. Curricular is not there. So he is always a problem child and we are grossly unhappy with you. We are grossly unhappy with your brother. This is the third type of opinion principal can give. If you observe, first opinion, all positive. Third opinion, all negative. Then comes the second opinion. In the second, opinion, in the second alternative, principal also could have told you that your brother, overall we are happy, no doubt about it. Overall we are happy with your brother. He comes in top 5, whenever exam is conducted, he is a disciplined student, he writes everything is fine. But sometimes he'll turn nasty, he'll fight with others, he's into that quarreling and all, and sometimes, his attitude is wrong, or extracurricular he won't participate, he won't come on time, I have a problem with his punctuality, I have a problem with so and so aspect of your brother. Having said that, maybe in that age, many things are common, maybe eventually he'll be straightened, so don't worry much about it. I am okay. We are happy with your brother, but that doesn't mean there are no negative remarks. Your brother, we are happy with your brother. I have a positive opinion about your brother, having said that there are certain points on which he has to work on which you have to work on which he has to, improvise himself. There are certain negative comments I am telling. So certain things are wrong, but these small things which are wrong, will not disturb opinion on the character of a person. So overall we are happy with him, but there are certain points. This is second type of opinion. In fourth alternative, the principal is asking, ask your brother to come to school first. Last 2 months he did not come. So his attendance is 0. He is not writing the exams. So when your brother has not written the exam, how can I give opinion on the academic performance of your brother? Isn't it? So ask him to write the exam. Then if I look at his answer sheet, then I can decide whether he has written correct answer or no, whether his preparation is appropriate or no, whether his understanding of the concept is correct or no. I can tell you. But when he is not writing the exam, the answer sheet is not available. Audit evidence is not available. How can I form an opinion? How can I express an opinion when there is no basis? This is fourth situation. If you understand this example of your conversation with your brother's school class teacher or principal, 1 absolutely positive, clean report. 3 absolutely negative, adverse report. 2 fine, overall we are positive, but there are certain negative comments reported. That is a qualified report. That is a qualified report. We do not have the audit evidence. We cannot conduct, we were unable to conduct the audit. We do not have, audit evidence. We have not obtained appropriate audit evidence, so we cannot decide. That is disclaimer of opinion. So my dear friends, overall there are 4 types of audit reports. There are 4 types of audit reports which are broadly classified into 2. What are that 4 types? One is unmodified. This is clean report, or rather we can say one is clean report which is unmodified. Clean report. This is unmodified. 2. Second one is a qualified opinion or a qualified report. Second one is a qualified report. Third one is adverse report. Fourth one is disclaimer of opinion. So first one is unmodified. 2, 3, 4 put together are called modified reports. So this is the agenda in SA 705. What is SA 705? The title, do you remember what is the title? The title of the standard is Modifications to the Opinion. When will you modify? Modifications to the opinion in the independent auditor's report. So an auditor, an auditor modifies his report when he concludes that he cannot express clean report. He cannot express or he cannot give a clean report. So you are asking one question, dear auditor, when will you modify report? You are asking a question, dear auditor, when will you modify report? Auditor is giving you answer. Simple. In a situation where I feel that a clean report cannot be given, then I will modify. Now, what is the meaning of a clean report? So, when a clean report is to be given, or what is the inference? What is the conclusion? What is the inference of a clean report? When clean report is given, or when auditor expresses clean report, what does he mean? What is running in his mind? One, that the financial statements, or you can remove that, the financial statements are prepared in accordance with applicable financial reporting framework. What is this? The financial statements are prepared in accordance with applicable financial reporting framework. That means law, yes, complied with. Accounting standards, yes, complied with. So law is complied with properly, accounting standards are complied with properly. Two, all the transactions are supported by sufficient appropriate audit evidence. What is SAAE? Sufficient appropriate audit evidence. All the transactions, or maybe all the material transactions, all the major transactions, majority of the transactions are supported by sufficient appropriate audit evidence. Okay. Three, there are no material misstatements in financial statements. What is MMS? MMS stands for material misstatements. There are no material misstatements. Material misstatements will happen either through fraud or through error. Material misstatements happen usually through fraud or error. That means auditor is saying there is no fraud, there is no error which is material. There is no fraud, there is no error which is material. This is point number 3. Point number 4. There is no limitation or restriction on the scope of the audit. What is scope of the audit? So whatever the procedure auditor wants to perform, is he in a position to execute it? Is he in a position to do what he wants? Say for example, I want to see, there is one motor vehicle. I want to see it physically. So I requested the finance manager, dear finance manager, as per your balance sheet, there is one lorry. I want to see the lorry. Finance manager said, no, not possible. So am I able to do what I want? If the answer is no, am I at least able to do some alternative performance? Can I do some alternative audit procedure, and through that am I able to obtain audit evidence? Now, if this happens, then what is the problem? In this situation, if there is a scope limitation, the auditor cannot perform appropriate audit procedures. So when he cannot obtain appropriate audit procedures, the auditor cannot obtain sufficient appropriate audit evidence. That means, what is the conclusion? There should be no limitation on the scope of the audit. My hands should not be tied. You cannot restrict me. If I am appointed to be the auditor, I should be given free hand. So I should have access to books of account. I should be in a position to obtain information and explanation. I should be in a position to inquire. I should be in a position to question the directors. I should be in a position to get the audit evidence whatever I want. If you are tying my hands, if there is a restriction or the limitation placed on the auditor, my dear friend, remember, he cannot execute, he cannot implement his audit plans properly, he cannot carry on the audit properly. If he cannot carry on the audit properly, how can he obtain audit evidence? If he cannot obtain audit evidence, how can he, form some opinion? If he cannot form the opinion, how can he express or communicate opinion on financial statements? So, fourth one is, there is no limitation or restriction on the scope of the audit. That means, overall, auditor has nothing negative to comment on. Therefore, he gives clean report. So the auditor has nothing to speak negatively about the financial statements. Therefore, he has given a clean report. So read this. When a clean report is to be given, 1. The financial statements are prepared in accordance with applicable financial reporting framework. All the transactions are supported by sufficient appropriate audit evidence. There are no material misstatements in the financial statements, no frauds, no major errors. There is no limitation or restriction on the scope of the audit. And the auditor has nothing to report negatively on the company. So from all the sides it is positive. So auditor has given clean report. That's all. You understand this? Copy this. Okay, now look here, let us take it to next level. Let us ask another question. Is there a misstatement in financial statement, or are there misstatements? Is there a misstatement, or are there many misstatements in financial statements? Answer could be no, or answer could be yes. If the answer is no, auditor is happy. When there is no misstatement in financial statements, auditor is happy, no. If the answer is yes, that means there is either one or many misstatements in financial statements. Then auditor will ask second question. Is it material? Okay. Is it material? Say the answer is no. Answer is yes. Now again the auditor is happy. Why? There is a mistake, but it is very small. So auditor is very happy. You understand? Either there is no misstatement, or there is misstatement, or there are misstatements, but which are very small, trivial. Considering the size of the company, they are not material. Then auditor happily issues clean report. Here what the auditor will do? Clean report. Okay. Now, if the answer is this, what is the meaning of this? There is or are material misstatement or material misstatements in financial statement. That means there is one or more material misstatements in the financial statements. Now what to do? Auditor will ask another question. Auditor will ask another question. Is it pervasive? Is it pervasive? What is the meaning of pervasive? The dictionary meaning of pervasive is spreading throughout. Spreading throughout. Is it pervasive? The answer could be no. The answer could be yes. Then what happens? If the answer is no, it is material misstatements exist in financial statements which are not pervasive. Which are not pervasive. Then here material misstatements exist in financial statements which are pervasive. So here there are two tests. You are conducting two types of tests. What are the two tests you are conducting? Materiality test. Yes, past. Pervasiveness. Not past. Then it is one situation. Here, is it material? Yes. Materiality test attracted. pervasiveness attracted. Okay, in this situation, auditor gives qualified opinion. In this situation, auditor gives qualified opinion. In this situation, auditor gives adverse. Now we need to understand what is pervasiveness. Okay, you understand the whole story. So look here, look at this. Where we started, is there a misstatement? No, auditor is happy. Is there a misstatement? Yes, auditor is not happy. Now the auditor is asking, is there a misstatement? Yes. Now the auditor is asking, big mistake, small mistake. It is a small mistake, say 20 rupees. No problem. If it is not material, no problem. Then again auditor is happy. Why? There are certain misstatements which are very small. But when there are misstatements which are material, the auditor decided, at this level the auditor decided, no clean report. I have to modify. This I have decided here itself. But what modification? Big modification or small modification? Small modification is qualified report. Big one means slap, adverse report. Okay, now to enable the students to understand whether it is pervasive or no, usually I give one small example. Okay, I give one small example. Say you are hungry, you want to eat something. You know that you have grapes in your refrigerator. So you went to the fridge, you opened it, and there is a basket, fruit basket. So the basket you have taken out. There are grapes. When you opened the bunch, you felt, wow, they are very fresh. Then you do not have anything to comment negative about these grapes now. Clean report. Everything is fresh. Then second situation is, there are certain transactions or events, some of the grapes in the bunch which are spoiled. So now you decide, I cannot give clean opinion because grapes are spoiled, some of them. Now you need to decide whether the whole bunch is spoiled to a level where you say, gee, I can't eat this, throw it in the dustbin, wash your hands with Dettol, and you're like, ooh, no. So are they spoiled to that level? Or the damage or the spoilage is confined only to few transactions? If it is minor spoilage, then what you do, this grape are not well, throw it in the dustbin, remaining grapes are fine. So there are 200 grapes in the bunch. 4 grapes are spoiled. So what do you do? Which is quite, normal. Qualifications are quite normal. So you plugged it. This. I am not happy. Throw it, wash your hands. Remaining 196 are good. Wash them, happily eat. When your mom asks you your opinion about the grapes, 4 grapes spoiled and you have thrown them out, 196 grapes are good. Your mom asked you, are you happy with the quality of grapes? Are they consumable? Can you eat them? You said, Mom, grapes are fine. Then your mom asked, absolutely fine. Then you said, no, few spoilages are there, maybe 3 or 4. Apart from that, overall, yes, I am happy, I can eat it. This is called qualified report. Overall financial statements are showing true and fair view. But I have problem with 1 item, 2 items, 3 items, or few items. I have reservation on few items. Overall, I am happy. So pervasiveness is spreading throughout. Now look here. Audit opinion is on the overall financial statements. Audit opinion is not on any individual transaction or event. So here, to salaries, to rent, to advertisement, to depreciation, to provisions to XYZ. There are so many transactions by sales, by other income, by interest received, by dividends received, non-operating incomes. So here to net profit x rupees. So this is your P&L. This is your P&L. Now when you have conducted audit, you had a problem, and your problem is this. Your problem is this. I have problem with this. I have problem with this. Now there is a misstatement in depreciation. What is the situation? There is a misstatement in depreciation. There is a misstatement in depreciation. Now the question is, auditor has to ask a question himself. Is it spread throughout all the transactions, all the account heads, all the account balances? So is this affected, this affected, this affected, this affected? No, 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 no. This is affected, not affected, not affected, not affected. This is affected, this is not affected, not affected, not affected, not affected. This is affected. So my problem is, out of 200 items, 2 or 3 items I have problem. So what I tell you, the net profit given by the profit and loss account, the statement of profit and loss, is showing true profit subject to item number 1, item number 2, item number 3. That means I have problem with these 3 items, but my problem with 3 items is not so big to hit my mind so hard. My mind is not saying, hey Pavan, financial statements are not showing true and fair view. My mind is not saying that. My mind is saying these 3 are mistakes here. These 3 are wrong. They are not correct accounting treatments. These 3 are not correct accounting treatments. Having said that, whether it spoiled the whole truth, whole fairness of the financial statements? No. They are not affecting financial statements to the level that true and fair is affected, but there are misstatements which are material. So I just want to bring this to the notice of the members. So I said financial statements are showing true and fair view subject to or except item number 1, except item number 1. What is the mistake? You'll explain here. Item number 2. What happened? You'll explain here. 3. Item number 3. What happened in that item number 3? You'll explain. These are your qualifications. These are your qualifications. Now a pervasive misstatement. A pervasive misstatement is a pervasive misstatement is either not confined to one particular item of financial statement, and is spreading across. So it is spreading to all the financial statements. Like, some spoilage which is hitting major grapes in the bunch, majority of the grapes. So to a level where I cannot consume it. Now you do not even think of segregating good grapes, bad grapes, and then eating good grapes. No, your overall opinion is I cannot. That is called spreading across. So either this material misstatement is not confined, either material misstatement is not confined to one particular item or few items of financial statements and is spread across, or it could be second one, or even if it is in one item, the magnitude is such a big amount that it affects the whole profit reported. Now the problem is, now the material misstatement is confined only to one particular item, but the magnitude of this spoilage is huge. That means it affected the overall P&L. So though either it is, either it is spreading over to many items in financial statements or only one item, but that is hitting net profit like hell. So in these two situations, you call it pervasive. Either this happened or this happened, then it is pervasive. Pavan sir, I checked. No, this is not there. Pavan sir, I checked. No, it is not there. But Pavan sir, it is material. Then my dear friend, it goes to this situation where it goes to this, where is that? This situation where there is a material misstatement, but which is not pervasive. If it is spreading over to many items or one item which has a severe impact on the overall P&L, then it goes to this item. That's it. So remember, summary. What is the summary? What is the summary? Is there a material misstatement in financial statements? Okay. Or is there a misstatement in financial statements? Is there a misstatement in financial statements? Okay. Here the answer is yes. Now you are asking, is it material? Is it pervasive? Is it material plus pervasive? Material but not pervasive. Now you said, yes sir, it is material, but it is not pervasive. It is material, it is not pervasive. In this situation, you give qualified report. In this situation, you give adverse report. So try to read the box and understand the content. Try to understand the content. Is there a misstatement in financial statements? Yes. Is there a misstatement in financial statements? Yes. Is it material? Yes. Is it pervasive? No. Then it comes to first level. Is it material? Yes. Is it pervasive? Yes. Then it goes to second level. So here we'll write one more thing. Then the standard is over. The next one is, here we'll write one more thing. Now you remember this question I asked, is there a material misstatement in financials? Like this, I am asking you another question. Is there a limitation on the scope of the audit? Is there a limitation on the scope of the audit? The answer can be no. The answer can be yes. Here auditor is happy. Why? I can do audit happily, no? If there is no limitation, auditor is happy. If there is limitation, is it material? Again the answer can be no. Not material? Yes, material. If it is not material, again the auditor is happy. Why? There is only small thing. If it is material, the auditor cannot obtain sufficient appropriate audit evidence. Now this is a problem. So is the limitation, you'll ask the next question, is the limitation pervasive? The answer can be no. The answer can be yes. So left side, if the limitation is not pervasive, what does it mean? That means there is a limitation on the scope which is material but not pervasive, then what will you do? Qualified. Here, limitation on the scope which is material and also pervasive, then you give disclaimer. Okay, that means sufficient appropriate audit evidence is not available. Is it for one transaction, or is it for many transactions? Is it for many account heads? Is it for many account balances? Whether this lack of audit evidence is affecting my whole spectrum of financial statements, or is it affecting only one particular item or one particular head? If it is spreading, if the problem of lack of audit evidence is spreading over all the financial statements, then it is pervasive. No sir, it is not spreading over, but it is confined to one item or few items, one balance or few balances, one class of items or one class of transactions or few class of transactions. Material, but it is not of such big, magnitude. Material and is confining only to one particular item of financial statements and it is not spreading, then it is not pervasive. So based on this, look here, based on this, is there a limitation on the scope? No, auditor is happy. Here he gives clean report. Okay, then there is a limitation which is material but not pervasive, go to qualified. When there is a limitation which is material and also pervasive, then go to disclaimer. Now come to the summary table, fill the second part. What is the second part? Is there a limitation on the scope? Yes. Is it material but not pervasive? Yes. Then you give then you give qualified report. If it is both material and pervasive, then you go for disclaimer of opinion. Okay, now let us understand this table in a better way. This table, if you understand, the standard is over. This table, if you understand, the standard is over. Now let me put it in a different way. The summary 1, no material misstatement plus no limitation on scope, clean report. No material misstatement and no limitation on the scope, then you give clean report. 2, material misstatement or limitation on scope. Material misstatement or limitation on scope. What is the characteristic here? Material, definitely material, but not pervasive. Then you give qualified report. Then the third one is material misstatement which is both material plus pervasive. Misstatement which is both material and pervasive, then you give adverse report. 4, limitation on scope which is material plus pervasive, then you give disclaimer of opinion. Now remember one thing, misstatement never leads to disclaimer. Why? Because auditor has obtained audit evidence which proved that it is a mistake or it is an error or it is a fraud and the magnitude is big. So when you can have the audit evidence, when you have audit evidence in your hand, how can you disclaim? So remember one thing, the auditor can never express disclaimer of opinion when audit evidence is available. A material misstatement exists in the financial statements means you got the evidence. If you have not obtained the evidence, how do you know that there is a material misstatement? Simple. You understand? So, when it is given that there is a material misstatement, remember audit evidence is available. If audit evidence is not available, how can you confirm that it is a misstatement and it is material misstatement? So remember one thing, material misstatement, this phrase used means audit evidence is available. Means audit evidence is available. And this evidence is proving that the transaction is a fraud. So it is not the problem of lack of evidence. The problem is there is evidence which is proving that the transaction is a fraud. Then you come here. And remember one thing, limitation on the scope never leads to expressing adverse opinion. So when I cannot verify fixed deposit receipt, how can I say there is no fixed deposit receipt? So there is FD, 10 crore rupees FD is there. I have to say that they mentioned that there is FD, audit evidence is not available for that. You understand? I cannot say there is no FD unless I went to the bank, I have applied alternative procedures. Through application of alternative procedures, I concluded that it is a fraud. So remember one thing, lack of audit evidence or inability to obtain audit evidence or the limitation on the scope will result either in qualified opinion or in disclaimer of opinion. Limitation on scope never leads to adverse opinion. These two are very important for MCQs. Because they put lot of story, screenplay, drama, and then they will ask the auditor decided to express disclaimer of opinion. One very important MCQ I'll tell you. There is significant uncertainty on the going concern ability of the enterprise. 2. The provision for taxation is made for 2 crores, but in auditor's opinion, provision should be 85 crores. So these are some examples. I am giving you some examples based on previous examination questions and based on my experience and understanding, so that you will understand it in a better way. There is a significant uncertainty on the going concern ability of the enterprise. The provision for taxation is made for 2 crores, but in auditor's opinion, provision should be for 85 crores. Therefore, the auditor decided to express a disclaimer. Comment. Correct or incorrect? 90% of the students, my dear friends, I tell you, 90% of the students will write an answer, yes, the auditor has to give disclaimer of opinion. The answer is no, he has to give adverse opinion. Unless this is disclosed, if it is not disclosed in financial statements, the auditor should give adverse opinion. So you cannot give disclaimer of opinion. Disclaimer of opinion should be given when there is no sufficient appropriate audit evidence. Now answer my question. If you do not have sufficient appropriate audit evidence, how do you know that there is significant uncertainty of going concern? That means you have some strong evidence in your hand which tells you that, my dear friend, the entity is not a going concern. So unless you have that evidence, how can you say that there is significant uncertainty on going concern assumption? So in this situation, you cannot disclaim your report. You have to express adverse report. You have to express adverse report, and this is one situation. Then next example is the books of account. The books of account are destroyed by fire, seized by income tax, police, GST, or some government revenue department, enforcement directorate, money laundering case, CBI. So because of some reason there are no books of account. So the auditor is unable to perform audit and hence decided to express adverse opinion. Comment. Students will write yes, because he cannot conduct audit, express adverse opinion. The answer is no. No. Adverse report can't be. What is the question? Adverse report is to be given when there is evidence that there is a misstatement which is material and pervasive. Then adverse report can be given. Now, when there is no evidence or limitation on scope, what you need to give? Disclaimer. We are unable to express opinion. That is what you have to give. Why? Books of account are not available. How can you say there is no true and fair? When you are expressing adverse opinion, you are saying no true and fair. How do you know that there is no true and fair when books are not there? How do you know that student failed in the exam unless he writes the exam? That is the reason they put absent, no? Don't you think absent amounts to failure? That is a different story. But writing the exam and failing, not writing the exam and absence are different things. You understand? So I have to put absent. I have to put there that the books of account are not available. I cannot conclude that there are frauds. Books of account are not available. You understand? Now, 2 points you need to remember. Point number 1. Do you remember in our last class we discussed about CA 700? In CA 700, do you remember I have told you 12 contents starting from title, addressee. You remember introductory paragraph, opinion paragraph, audit responsibility, management responsibility, key audit matters, basis of opinion. Wait, do you remember basis of opinion? This should be changed appropriately. If you are giving qualified opinion, you have to write basis for qualified opinion. Basis for disclaimer. Basis for adverse opinion. Like that you need to change. So this is 1 point you need to remember. Not very important from exam point of view, but that is written in the standard. So I am just communicating it to you. Not an important point. And the wordings are very important when you are disclaiming. Okay, in qualified opinion, adverse opinion or clean report, you will say we have conducted audit of financial statements of X Limited for the period ending on 31/3/2020 and we give this opinion. So what is that? We have conducted audit of financial statements of X Limited for the period so and so and we are expressing this opinion. My dear friends, remember on a very serious and important note, you cannot use these wordings in case of a disclaimer. Why have you conducted audit? No. So how can you use this word? Very important to write. We were appointed to conduct audit of financial statements of X Limited for the period so and so, but we were unable to conduct audit. We were appointed to conduct audit, but I cannot say that I have conducted audit. I am unable to conduct audit. Why? Books are not there. So do you understand the difference in the wordings? First one you are saying we have conducted audit of financial statements. For 1, 2, 3 you are saying we have conducted audit of. But for 4 you are saying we were appointed to conduct audit of financial statements but we are unable to. but we are unable to. So using this phrase, we have conducted audit of, is prohibited when you are giving disclaimer of opinion. What is that? Usage of the phrase we have conducted audit is prohibited when you are going to disclaim. You understand? That's it. This is all about CA 705. You understand it? This is all about CA 705. Any doubts in this? Any doubts in this? So the next one is 706. That we'll discuss in the next class. So any doubts in this? As I told you, advanced accounting, we have started advanced accounting for both inter and IPCC. So this is new syllabus, this is old syllabus, and FM and strategic management. These subjects are available in Windows mode and Android mode. Classes can be watched both in your computers and in mobile phones. If you are interested, or if your friends are interested to buy these things, conceptually explain all the things. If you are interested, you can contact 98467915998. So that's all for today. Thank you. Okay, thank you. See you tomorrow. Tomorrow we'll discuss 706. Thank you and good night.